First of all, let me thank Indrani for extending the invitation to address this gathering. I will try to be brief in my remarks today and try to highlight the emerging challenges before the Chief Compliance Officers as well as the RBI's regulatory expectations from them. Globally, the financial landscape is fast evolving as newer challenges continue to emerge, which compel the banks to adapt and come up with novel solutions to address the challenges and remain relevant. This demands continuous reorientation of the institutional architectures, realignment of business strategies and business re-engineering to upgrade the benchmarks for service delivery and enable growth. However, while dealing with these changes, ensuring that the new systems remain in tune with the regulatory and supervisory expectations as well as other statutory and legal requirements assumes importance. It's in this context that the role of the assurance functions in the financial institutions, especially the role of compliance functionaries, becomes important. Banks and other financial institutions perform a crucial role in the economy by intermediating funds from savers and depositors to activities that support enterprise and help to drive economic growth. For orderly functioning of the financial system, it is necessary that the conduct of the stakeholders is subject to certain minimum standards of safety and prudence, which may take the form of laws, regulations, guidelines, and codes. Compliance to these ensures orderliness while reducing the overall systemic vulnerability. Safe and sound financial intermediation is a key to financial stability and central to the economic health of a country. The Basel Committee on Banking Supervision has defined compliance risk as the risk of legal or regulatory sanctions, material financial loss, or loss to reputation that an entity may suffer as a result of its failure to comply with the laws, regulations, rules, related self-regulatory organizational standards, and codes of conduct applicable to its activities. Compliance of laws, rules, standards generally covers matters such as observing proper standards of market conduct, managing conflicts of interest, treating customers fairly, and ensuring suitability of customer advice. In the Indian context, if we look at it, Reserve Bank had introduced the system of having compliance officers in the banks as far back as in August 1992, based on the recommendations of the Committee on Frauds and Malpractices in Banks, that is set up under the chairmanship of the then Deputy Governor, Mr. Ghosh. The role of compliance officers came into sharper focus since 1995, when the General Manager in charge of audit and inspections in the public sector banks was made responsible for the compliance functions with requirement for periodic reporting or certification on compliance functions directly to the Chairman and the Managing Director. As a part of the robust compliance systems, banks are required to have an effective compliance culture, independent corporate compliance function, and a strong compliance risk management program at the bank and at the group level. Such an independent compliance function is required to be headed by a designated Chief Compliance Officer selected through a suitable process with an appropriate fit and proper evaluation selection criteria to manage the compliance risks effectively. However, to ensure uniformity as also to align the supervisory expectations on the compliance officers with the best practices, the banks were advised in September 2020 to adhere to certain minimum standards on the tenure of appointment of the Chief Compliance Officer, their transfer or removal, the eligibility criteria, the selection process, amongst others. The guidelines also detailed the roles and responsibilities of the Chief Compliance Officer. More often than not, the compliance function is treated as having little strategic value, which in my view is a very myopic perspective. It needs to be appreciated that the compliance related activities reflects opportunity cost for institutions. In fact, the cost of compliance can be divided into two broad heads, namely the cost associated with ensuring the compliance, that is the operating cost, and the cost of non-compliance. However, this opportunity cost could be juxtaposed against the risk of a compliance failure, which at times could jeopardize the very existence of an entity. Therefore, objectively assess the benefits of compliance far outweigh the costs. The Regulation Review Authority, in its recently released report, has made recommendations on streamlining regulatory instructions, reducing the compliance burden on the regulated entities by simplifying procedures, and rationalizing the reporting requirements wherever possible, which should help to reduce the costs of compliance. This exercise of trying to identify the circulars, rationalizing the instructions, going forward, we hope to make it an ongoing process. And this outcome of the RRA exercise should help to reduce the costs of compliance. The outcome of the RRA exercise should result in clarity, simplification, easier accessibility, and rationalization of regulatory instructions and returns. Many of you have actually actively participated in the RRA exercise, and I hope all of you have had the occasion to go through the report. As the Reserve Bank has emphasized time and again, compliance starts at the top. Keeping this in view, the Reserve Bank has mandated that all banks and large NBFCs should lay down a board-approved compliance policy, clearly spelling out its compliance philosophy, expectations on the compliance culture covering the tone from the top, accountability, incentive structure, effective communication, and challenges thereon. The policy should also identify structure and role of compliance function, the role of the Chief Compliance Officer, the processes for identifying, assessing, monitoring, managing, and reporting of compliance risks throughout the bank. This should adequately reflect the size, complexity, and the compliance risk profile of the bank, expectations on ensuring compliance to all applicable statutory provisions, rules and regulations, the various codes of conduct, including the voluntary codes, and the bank's own internal rules, policies, and procedures, and create a disincentive structure for the breach of compliance. The policy is expected to be reviewed at least once a year. As such, the board is made responsible for overseeing the management of the bank's compliance risk. They should approve the bank's compliance policy and review the extent to which the bank is managing its compliance risk effectively. Though the boards have been tasked to approve the compliance policy, it will not be effective unless they promote the values of honesty and integrity throughout the organization. A bank should hold itself to high standards when it's carrying on business and always strive to observe the spirit as well as the letter of the law. Failure to consider the impact of its actions on its shareholders, customers, employees, and the markets may result in significant adverse publicity and reputational damage, even if no law has been broken. The senior management is responsible for communicating and reinforcing the compliance culture established by the board, and also for implementing measures to promote this culture. Senior management should also implement and enforce the compliance policies and compliance risk management standards that have been approved by the board. The compliance function is central to the bank's system of accountability and is required to ensure that the bank adheres to the prevailing laws, rules, and regulations while conducting its business. In this respect, it is not sufficient to ensure that the compliance policy simply exists, but it should also demonstrate that they are applied in substance to managing the compliance risk. Moreover, compliance with legal and regulatory rules is the responsibility of the organization as a whole and is not a function located within a single department to administer. Let me also say that the compliance functionaries also need to be prescient. The central premise of the compliance function is not to simply act as an internal watchdog, but also to work with the businesses units to minimize the likelihood of compliance failures. That is to make sure that the business units do not breach the rules, laws, standards governing its activities, which could result in a variety of regulatory sanctions. Therefore, it is essential that the compliance function within the entity is organized in a way that is consistent with its own risk management strategy and structures. Needless to mention, irrespective of the internal structures, compliance function should be independent, responsibility should be clearly specified, and activities subjected to periodic and independent review by the internal audit function. The role of the Chief Compliance Officer is critical and requires him or her to address demands from a lot of competing stakeholders, that is the regulators, the supervisors, law enforcement agencies, board, senior management, business verticals, as well as internal audits. Even where all these stakeholders agree upon the core function of the Chief Compliance Officer, there would be areas of interest which overlap, where the expectations from the concerned stakeholders could be divergent. The effectiveness of the Chief Compliance Officer lies in handling such divergent expectations and arriving at an independent and objective decision without compromising on the legal and ethical frameworks. In the erstwhile era of traditional banking, which was characterized by plain vanilla financial products and micro regulations, the compliance function was relatively simple. However, with the development of financial markets and the advent of technology, it needs to be appreciated that the role of compliance functions has widened. At times, when the financial products and practices do not fit into any traditional model, the role of the Chief Compliance Officer is to ensure that there is no compromise on the underlying regulatory principles and intent. In sum, the Chief Compliance Officer should function as an extended arm of, at least as we view it, from the Reserve Bank of India. Though of course I think it applies equally to all other regulators as well. Let me give examples of how compliance functions can facilitate implementation of regulations, both in letter and spirit, across the institution. The regulatory paradigm has, over the years, moved towards greater deregulation in all respects, and the banks are expected to be guided by their respective board-approved policies. Translating the regulatory principles as well as the regulatory intent into internal policies is critical, and the role of the compliance functions is crucial. The compliance function essentially entails taking ownership of complying with the regulations, and the internal dynamics between the business verticals and compliance vertical needs to reflect this objective. Apart from laws and regulations, the role of compliance function is important in ensuring adherence to the various codes of conduct, particularly relating to conduct of the customer-facing barrier lines. The expectation is that these codes are duly incorporated in the internal policies, but unless they get integrated into the organizational culture, its effectiveness is likely to be compromised. The Chief Compliance Officer should strive to create or facilitate an environment wherein the employees are encouraged to communicate confidentially and without any risk of reprisal legitimate concerns about the unlawful, unethical, or questionable practices within the bank. This can be achieved by putting in place a structured whistleblower mechanism which will allow employees to communicate material and bona fide observations of any violation in a confidential manner. In the age of fintech, the Chief Compliance Officer needs to be conversant with the financial products and service structuring and delivery. While innovation is always welcome, new collaborations, products and delivery or sourcing channels should not lead to regulatory violations or compromise of business ethics. We have seen the banks partnering with fintechs for both asset and liability products without analyzing the value propositions that they bring to the table. Many a times, we have found the regulated entities to be clueless regarding the scalability, stability, and soundness of such technological platforms. It is our hope that as Chief Compliance Officers, you are evaluating such risks in your respective organizations. Ultimately, the onus of ensuring compliance and ensuring that your business partner is following ethical business and conduct lies with you. This principle has been enshrined in the RBI's outsourcing guidelines for both financial and non-financial services. Also, it would be necessary for the bank or the NBFCs to ensure that your fintech or outsourcing partner is compliant with the data protection and privacy standards, and that there is an effective business continuity planning in place to handle cases of disruption. Many a times, greater coordination between the Chief Technology Officer and Chief Compliance Officer may be required to achieve this. In this swift-paced world, compliance with existing rules alone is unlikely to be sufficient. Rather, entities will need to comply with the broad principles if they are going to protect themselves against potential acts of non-compliance. For example, they should ask themselves whether the practices are fair from a customer's perspective, or whether they would feel comfortable fully disclosing the practices to the customer, supervisory authorities, and the public. If they do not have this comfort, it's a clear warning sign to desist or modify. Let me also urge your fraternity to refocus your efforts towards positive affirmations. Most of the time, the compliance function is focused on what should not happen to prevent regulatory failures. It is the prudent thing to do, and I am in no way suggesting that you should drop your guard on that count. However, a large amount of your efforts should also focus on what should happen or what is the best thing to happen. Let me give you two examples of what I'm trying to convey. One, we came up with this resolution plan for restructuring of businesses, the Resolution Framework 1, which was extended later on to cover the MSMEs and the individuals to help them through tough times during the pandemic. We found that the scheme was not publicized adequately by the banks. We received several complaints suggesting that the branch level officials were unaware of the remedies provided by the Reserve Bank to reduce the pandemic-induced stress. At that time, when we dug in a bit deeper to see whether the banks were making these schemes available to the members of the public, especially the individuals and the small businesses, we find that none of the banks, not even one, had displayed this information prominently on its website. It was never visible on the home page. It may be in some corner of some other web link which is not very, very apparent. I think that was not a very good way of publicizing a scheme which was intended to help the public. A second example was when we had issued guidelines on the video-based KYC, or the VCIP as we call it, and the simplified updation of the KYC information. We continue to receive customer grievance complaints on this count. I'm afraid that either there is a lack of awareness at the level of the branch staff to implement the simplified version of the guidelines, or they have not been disseminated enough among the customers to alleviate their grievances. The point I want to make by quoting these examples is that the role of compliance expands to ensure that the regulations are integrated into business processes, and the benefit of simplified regulations or accommodating schemes has to be passed on to the end customer. In conclusion, just let me say that regulatory preparedness can be achieved only if the compliance function works closely with the business verticals. How to achieve full compliance and protect the banks from the risks, the compliance compliance function needs to be integrative part of the thinking process at the beginning itself and not as an afterthought. As the rules become even more complex and consequences of non-compliance even more severe, the banks will likely to have no choice but to hardware the right behavior into their products, services, and processes. While these interventions cannot be automated, robust surveillance and monitoring will become increasingly critical. This is the only way to ensure a very low error rate within the first line of defense, while ensuring effective oversight by the second line. Let me stop here. Thank you very much.